Good morning, everyone, and welcome to the Ankerstar Wealth Morning Show. I'm your host, Allison Ankerstar, and today we'll be talking about the markets in turmoil, the latest news on CDs, and the Porsche IPO in Europe. But before we begin, as a reminder, this is financial education presentation and should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Good morning, Steve. The stock market gave back all of yesterday's gains this morning. What can investors expect as we appear to be hitting new lows?
Hey, good morning, Allison. Always great to see you on camera there. And good morning, everybody else. Unfortunately, today is one of those not good news days. So, nothing good to report when you wake up to a market that has already given back what I would call a banner day yesterday, up a couple percent. You got the Dow off over 500 points, NASDAQ down 3%. So really a rough day for all of those that kind of got their hopes up yesterday that things were kind of over. So let's pull up a chart so you can kind of see where we are. We'll go with worst case, right? NASDAQ, let's call it is what it is, and talk about the future here. So here we are. You can see that little bump all the way to the right. This is a 1-year chart of the NASDAQ that we did have that bounce right yesterday, up a couple percent, and then turn around and reverse that all this morning. And that puts us right at that resistance line, if you will, from the new low or the previous low this year of June 15th. So like we talked about yesterday, when charts break, right, when you go to a new low, the chart's broken, and at that point, you could be facing a free fall. So I'm not sounding the alarm, but I'm saying that we are certainly at a point that is a little bit tough for the market because, who's going to hop in and buy if we break the new lows today? It's not a long time to the next Fed meeting, which is 6 weeks, but it's also a long time when you're staring at the market every day. So just be prepared to kind of for anything to happen, which means, two things. Don't freak out if we continue to sell off, and also don't necessarily go out and party like it's 1999 if the market goes back up a couple percent, right? We're at that kind of no man's land area for the market. So that's kind of where we are today. I don't expect things to turn and go back green. So we're buying some form of red day, and we'll just kind of see how bad it gets.
Next, CDs are now paying up to 4.6%. What are the advantages and disadvantages of CDs?
Yeah, so I'm just going to, Google CD rates here just to pop it up to see whether these are ads. So maybe that's not worth it. Probably should have gone with the bank rates one there. But yeah, with if you go to the local bank, so here's what Capital One has. And again, I'm not pushing Capital One or whatever, but just using this as an example. So they have a 5-year CD right there for 3.5%. So if you go down to the bank or go down to the Capital One store, or you probably do it online, conceptual store, you can lock into a 5-year CD at 3.5%. So what are the advantages? Risk-free money, right? You don't have to worry about losing money on it. And you simply get coupon payments either monthly or every 6 months, depending on how your CD is set up. Excuse me. And, you 5 years from now, you get your money back. Now, if you want to do CD and bet, what are the advantages? The advantages are it's nice, safe money. What are the disadvantages? Well, if you go through a bank, you do have to hold it to maturity. And if you want to break your contract, then you are going to pay some form of penalty. Usually you have to forego a little bit of interest, that sort of thing. There's always going to be a little bit of penalty there if you don't hold it to maturity. However, like I've been talking about, if you want to invest in certificates of deposit, CDs, through Schwab, you're going to get a higher rate. So Schwab rates yesterday were 4.6%. I've been buying these ever since 3.7%. I considered what are the advantages? Again, great place to have risk-free money, and you can get a higher rate if you go through Schwab, and you can move in and out of them in Schwab a lot easier than you can if you go through your local bank. Now, what are the downsides of going through Schwab? Well, since it is on an open market, it's going to have a spot price. Now, a spot price is, for those who don't speak the lingo, the price that the last one traded at. So you come out, each CD comes out with, millions of dollars, and then they get bought up. Once they get bought up, then they float with the market. And if it's a more desirable CD, it could actually be cost you more than 100. If it's a less desirable CD, it costs you less than 100. So for those of you that I put you in CDs, basically anywhere from 3.7 to 4.5%, you're looking at, when you check your app every day or the website, you're seeing a spot price less than 100. So you're down at 99. Or if you're the 3.7 person, you're down at like 95. And you're like, what is going on, Steve? And I said, well, I was surprised. I thought it would move by pennies. It is not. It is actually for the lower ones has moved by dollars. So it was a misanalysis on my part as far as how far down it could move. I figure a few pennies, I'm not going to worry about. A few dollars, it's like, well, crap. That's not what I expected. So why is that? Well, excuse me, interest rates move up. There's higher interest rate CDs available. So why would I pay $100 for a 3.7 CD if I can get one that pays out 4.6? So, and then if I still want the 3.7, I'll just pay a little bit less, right? So it all kind of makes sense from a big time investing, long-term investing perspective. You're still, when you own that CD, you're still getting those coupon payments as contracted. If you hold it to maturity, you don't care at all about the price. The intent wasn't to hold it to maturity. The intent was to be able to move out of it when we wanted to. Now I'm just going to have to be a little more nimble as your advisor to find a time when we can move out of that. We may have to hold it through the peak interest rate period, which could be off in the next year. So a little bit of patience for those that are involved in the CD investing. I still think it's a good place to put money. Just realize it's not quite as clean of a picture as if you go down to your local bank and get a percent and a half less.
Last, Porsche IPO last night in Europe. Is Porsche a buy or sell?
Well, I love this chart, right? So you go to a one-day chart on its IPO and it says new 52-week high today. Well, it's also, okay, new 52-week low, right? It's first day, right? So here is the one-day chart on Porsche. It looks like it closed fractionally, 6 cents above, or that might be euros. I'd have to look actually, depending on what denominator it is. But standard IPO popped up to 86, leaked throughout the day. I do think the market's closed or about to close over there. Here's my take. If you want to invest on a foreign exchange, which this is, right, it's the XETRA. I don't know. We'll see exactly. Yeah, these are euros, not dollars. I just saw that. You can invest on a foreign exchange. You can buy these. Sometimes there are ADRs, which are actually trade on U.S. exchanges. Sometimes you just simply call Schwab. They execute the trade in euros. You tell them I want to put in $10,000. They do the conversion to euros. They do the exchange on the European exchange, and then give you a receipt, if you will, for a holding on your statement. So it's possible, in other words. Now, back to the question: is it buy, sell, or hold? Well, I guess kind of hold, because today is the first day, right? So really, is it a buy? It's got a PE of 9. They do have nice big profits. I would say, right now there have not been not too many IPOs, just because we're looking at a recession. We're either technically in one and in denial, or we're going to be in one. And certainly if inflation doesn't just all of a sudden start fading pretty quick, we're probably going to be not only just be in a recession, but we're going to be in like a pretty big recession. And of course, if inflation doesn't give and the Fed doesn't give, we could end up, that's that worst case scenario that Blackstone was talking about, is then you could end up in the mother of all self-induced recessions, right? So there's a lot of, I wouldn't hop into anything new right now. If you love the car, if you have like 5 of them because that's your thing and you want to buy some stock, absolutely put some money in the stock. A small amount to you, which may be 1,000 or 5,000 or whatever it is. You can buy some if you want. I just wouldn't have any expectations of buying into really any IPO going into what I would call kind of an obvious recession period coming up.
Thank you everyone for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@ankerstarwealth.com. And don't forget to like and subscribe to get daily updates. That's all we have for today's show. I'm Allison Ankerstar, and we'll see you back here tomorrow.